Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the responsive sellers were more dominant and more active off of yesterday's high and off of the overnight high. And that's very much in alignment with our larger time frame bias, which continues to be bearish. In the short run, we know that the market can balance and there can be a little bit of buying coming into the market, but bigger picture, the equity markets are heading into some decent resistance, and I think that continuing higher from this point on, from yesterday's high and from the initial resistance zone today, 85, 87, I think continuing higher from that point on is going to be more difficult, and because of all the overhead resistance, it's not going to be just a straight line move. So even if the market has some momentum behind it this morning and we do get an upside move, I don't think it's really going to be a rally, but more of a choppy two-sided type environment because of this larger time frame resistance that the equity markets are running into. And because of that larger time frame bias, there's still that potential of a complete failure off of one of the resistance zones up here and a turnaround. Considering that it's Friday, we're heading into the weekend, and the overall bias continues to be bearish, it's unlikely that we're going to get a surge into the close or heading into the weekend. I think that there's still a lot of risk on the buy side, especially at these higher prices, and there's a lot of risk in holding long over the weekend from these higher prices. So the overall bias continues to be bearish, and the overnight session has been a bit more bearish than bullish, but we're still maintaining above yesterday's VPOC, and there's still potential that the buy side can step in here. It's really just going to depend on the type of momentum we see off the open, but the overnight session has been primarily dominated by the responsive sellers. So heading into the open, we have pre-market resistance, 77 quarter to 79 quarter. Holding below that area would signal that the sell side is still in short-term control and there could be a move lower. On the downside, we have support 67 to 68.5. That area has been tested in the overnight session. Immediately below it, we have support at 62 to 64 with yesterday's VPOC at 64. Now, if we are breaking the 67 to 68.5 on strong downside momentum, then the 62 to 64 will have a less of a chance of actually holding and turning the market back up. It's really more of a reference area where if the market slices through 62, 64, that would confirm that the sellers are in firm control, and from there we can go down to 48 to 50, even yesterday's low at 44 quarter, and possibly down towards the open gap at 38, and finally the 33 to 35 support zone would even have a chance of getting tested if we slice right through 62 to 64. On the other hand, if the market kind of stabilizes at the 62, 64 area and we're having some trouble going through it and kind of starts turning around there, then perhaps we're in more of a balanced type market, and that would limit the downside potential. If we balance at 62, 64 and then we again start a breakdown, then again the acceleration would be there and the momentum would be there. So that's something we'll have to gauge in real time, because right now heading into the open, the short-term bias is relatively neutral because we're opening kind of in the middle of range here. And even though sellers have been more dominant overnight, the overall picture over the last session and over the overnight session is relatively mixed. And the larger time frame bias continues to be bearish, but that is really off of the higher resistance zones, right? That's where the edge comes from, the larger time frame. So in the event that we break out above 77 quarter, 79 quarter, on the upside we can test 85, 87. That's still an area where sell side can be active. Above that we have a gap, 89 quarter, and yesterday's high at 90 quarter. Those are areas where sell side can be active. 95, 96, and 2075 to 0275 are both resistance zones where there is possibility of a failure, but we will have to gauge the momentum situation in real time to see whether it makes sense to take a short setup at 95, 96, 2075 to 0275, and 06 half to 08 half. In most scenarios are automatic short setups on first test, as long as we're not going up on extremely high momentum. It should be okay. So you may have to time the trade a bit there, and that's even if we get there. So those are the upper resistance areas that are currently in play. But right now, short term, it's really about how the market reacts to 77 quarter, 79 quarter. The market has been balancing for the most part between pre-market support and pre-market resistance. So a breakout above the pre-market resistance could easily take us to 85, 87. And if we're going up on really high momentum, then perhaps even the gap fill and yesterday's high. And those are areas that can be tested. But then from that point on, it can be a struggle for the market to go higher, just because all the equity markets are at some pretty decent resistance here. So for that reason, we are going to continue to be pretty careful on the long side. The short side still has some decent reward potential, and as you move higher, the risk on the buy side starts to go higher, and the reward side actually starts to go lower. So as you move into these upper resistance zones, the risk reward doesn't really favor the buy side much, especially on the larger time frames. So that's another reason that we are still more focused on shorts rather than on longs, because there's still that potential of a complete failure and a downside move in this market, and it's still very risky for buyers up here. So that's the context heading into the day. Off the open, keep an eye on the pre-market resistance zone, pre-market support. That'll help set the bias on the day time frame. And then if you can break through the pre-market support and the 62, 64 area, then that would seal the intraday bias. And as long as we're holding below those zones, the intraday bias would be bearish, and we could get a test of 48 to 50, possibly yesterday's low, open gap 38, and finally 33 to 35 if we're really going down on a trend down type advanced decline line and consistent and sustained downside momentum. So heading into the open, neutral to bearish bias. We do have to be flexible with that, but overall, larger time frame bias continues to be bearish. So those are our main thoughts heading into the open. Let's see if the sell side can take over off the open, and we'll take it from there.